Yo guys, Leggy here and welcome to a new video. Today we're going to be doing an update to our portfolio on Trading212. So was I going to be doing an update this quickly? Not at all. But we actually made some major changes. So let's have a look how much we're actually on before we get into the video. So as you can see by the graph, last week I made a video, we were on £1,843, down 3.02%. We actually added some funds, which I will get into. This is what this video is on about. And now we're sitting on £2,605.93, so we added quite a bit. And we're down 1.91%, which is better, which means we've gained about £10 from the last time I filmed. So before continuing, firstly, let's get into what I sold. So last time I was bigging up Palantir with their AI and saying, yeah, let's buy it, let's buy it. They just had earnings right, and so I sold it. Not because my view on the company is any different, just in the past I've notoriously been bad at selling, and I did say to myself, I'll have percentage targets where I sold, and Palantir just hit 20%. I know that's not that much, but I was like, okay, I reckon it could come back down. If it does, I'll buy it. If it hits a price point, I'll buy it. But I just sold it at around the 23% mark, only because I didn't have a huge amount in it. If I had more, I would have just kept it for the long term. But I didn't have enough time to get a good position in it before it rose up really quickly. Not that in the grand scheme of things, it's that high at the moment, but I think it will come back down. So I sold that, and I thought, I'll go buy other things. So the other one is Coinbase. The day after I made the last video, that one rose by 15%. Why did I sell that one? Well, again, I think that one can double. My views on it are exactly the same. I think it can double. I think it's at a low price point at the moment. I don't think it's going to hit the price it hit at IPO, but I still think there's a lot of room for growth, at least double. So why did I get rid of it with that view? Well, if I'm honest, I just hold a lot of crypto, a larger percentage than you really would want in a portfolio. So I just didn't want so as it rose, I was like, oh, do I want to have exposure to the crypto market in this portfolio when I've obviously got a lot of Bitcoin, etc. So I took the profit. And that leads us to where we are now. So AMD, that one rose by 12%. And again, because I have a little amount of money, I was like, oh, do I sell that one? Well, no, because as we saw Palantir, I still do want exposure to the whole AI thing. So I will dollar cost average into that, but I didn't add it after that pump. I'm going to wait for it to reduce slightly, and then I'll add more money. Then we've got Croda International. So I took a huge inspiration from a video, which I'll stick here, where he basically had his whole portfolio out by sectors, and what we've gone for is basically one big company that pays a decent dividend. Well, not all of them pay dividends, but I'll get into that later. But for the most part, a company that pays decent dividends, that is a large company within their sector. And he said that he had picked up Croda. It's at a decent price point at the moment. So we started into that. We're down, but not much at all. Second one is Greencoat UK Wind. So 2050, everyone's planning to get neutral carbon net emissions. So I think that renewable energy is massive in the upcoming years, just for the sake of the planet, really. So that's why I think that this one is a good one. I was actually thinking of investing in the clean energy ETF. I just didn't want to take away from my allocation of my other ETFs, which have fallen behind slightly, but in the future it is one which I will invest in when I've got more capital. So GSK, this one's an interesting one. So basically I went into it because it's at a low point, and also it pays a decent dividend. When looking at its price action though, obviously its high point was in COVID, where GSK and Pfizer were pumping out everything, making money on the COVID front. So you have to be careful with that, except I still think that, historically it's a strong stock. So yeah, that's why I went for that. So we then went for Halion. So this one is actually one which is branched off a different company, doesn't pay a dividend, but it's a fairly new stock. and it's very interesting. It's up 4.48% in the last 3 months, so I think it's got room to grow. Legal in general, I also explained in the last video, so I actually upped our stake in this one. So it's literally just paid out its dividend, which means that as you look at the graph, it's actually dropped. So it looks like it's a very good price point at the moment. So more was said about that in the last video, but that's why we bought that one. Then we've got S&T, which is Bailey Gifford, Mortgage Investment Trust. So if you look, it is horribly down. And why is this? So there's basically news that people are taking money out of funds at a alarming rate. So there's one rule in investing, and this is why this one is probably not the best call at this moment, is don't try and catch a falling wedge. Because if you do that, you can normally, it can drop a further amount of percentage and you can be really out. Except, mortgage investment trusts tend to be pretty safe long term. That's why I went into it. It also pays a good dividend. But yeah, I will continue to lower our cost down this. This one, I thought, wow, it's a brilliant price, and it continued to go down straight after I bought it. So, that's the number one. Yeah, I wouldn't recommend doing that to anyone else. But as you can see, that we've got other stuff, other safer bets to cover this one. So it's not a large part of our portfolio. And as I said, the nature of the business is quite a safe one. So next we've got Tesla. I really bigged this one up in the last company. What we've done, we've upped it, so we did go down. We stuck another £80 in. It's £1.30, 38 up at the moment. I really like Tesla. This one's, as I said in the last video, I'll just do a quick overview now. But a lot of people say that if you look at it as an automotive stock, it's really overvalued. If you look at it for everything else it does and almost base it as a tech stock, the growth is limitless, really. As I said before, I think Tesla's got real room to grow. And I think it will be a good investment. But as I said before, I do think that Elon, him being involved in the company, you have to expect the the odd tweet every so often, which does drive the stock down. I know he's trying not to do it. He got in real trouble for it before, but he's a wild character. So now let's look at our FTSE ETF holdings. So the first two I explained a lot more in this video I'll leave here. And that's the FTSE All World and the VHYL. So I think these are really good. They're both down because of the whole financial situation with the regional banks in America, but I think that, long term you can't really go wrong. We've also got the S&P 500. So the S&P 500 actually gives the historical returns of about 10% a year. So a lot of people in individual stocks can't actually outperform this. So with that in mind, as you can see, we got a bit of money, we put it in the individual stocks, but our long-term goal will actually be to invest a lot more in these ETFs. So the allocation is a higher percentage, because at the moment they're not much higher or even lower than our individual stocks, and that's just not a good way to invest. You say that a good allocation is 70-30 or even 80-20, so we will be aiming for that, which means that for a bit we'll be stacking up that unless there's some major opportunities in those individual stocks we started investing in where they drop to really good price points. Then we'll try and dollar cost average down in them as well, but that will be our primary focus. So with that, let's go and have a look at our pie, which I also won't go that too deep into because I have a video the other day where we went proper into it. So in the almost daily dividends, we're down 3.39%. So that probably is a max amount we're down at the moment. Still slowly recovering, not bad. We've got £1,301.95, but we've lost about £45 in here. So, again, I'm not worried about these long term. I will add to them, especially as I said in the video before, I think of adding £200 instead of £50 as soon as I get into a job dependent. Really need to do that after uni. But yeah, that's the portfolio update. Also, if you guys have got this far trading and you haven't actually got your own portfolio on Trading212 and you're with free trade or something, there's actually Trading212 every so often do a thing where if you sign up, basically, you can get a free stock between £10 and £100. So I will stick my link in the description. Full disclosure, I would get that as well, so we both get it. So yeah, I'd be very grateful. But with that, I hope you guys can see the direction I'm taking in my portfolio. My allocations are a little bit off, as I said, but hopefully you can at least see the direction we're trying to go. But with that, peace.